Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently, what we think is likely to happen next and all that wonderful stuff. As I get into today's video, if you do find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe. If you are watching this on X, then make sure you're giving us a follow and a repost. Really do help us push the content out to more like-minded individuals. Let's go ahead and jump right down into today's video. We'll keep this one nice and brief. But yet give you all the information I think that you need to know about the price action of Bitcoin. So let's kick things off with our 1 hour time frame. So here we have Bitcoin paired up with USDT. We're using the BitGet spot exchange on the 1 hour time frame here. Okay, so as you can kind of see, we've been stagnant, just ranging sideways across here. You can actually see that we've been gradually kind of grinding our way down, and we're still below that 50 EMA. We're still in that bearish territory right there. Okay, so we'll see how this kind of goes, but considering we're overbought here on the 1 hour time frame, the expectation will be that we'll start to slowly move our way down. Now, one of two things can obviously happen here. One, we could end up with a sharp drop to the downside, okay, and we'll head down towards our target range. Or secondly, what we do is we'll have a small move to the downside for a few hours. That will take us back down to the oversold area, and then towards the end of the day, a larger spike to the upside before we drop on down. Okay, I think it's inevitable that we're going to drop on down just based on the current structures that we see within here, right? We're looking for a target range of 25,485 to 25,603 approximately. This is basically to make a three-wave pattern here, because I suspect that we are more than likely going to be in a three-wave pattern or a diagonal based pattern overall, and we are looking at the main target range of 23,287 to 24,113. There's obviously a few different target ranges in here following on from yesterday's video, but not much has changed from yesterday, because all we've gone and done is a sideways ranging market, okay, just bouncing from that 50 EMA. So what we're looking for here remains the same. We have to basically look for these moves to the downside to complete out this wave 3, which will be this wave 5. Okay, this wave 5 to me looks like it will be a diagonal in its structure, taking us down towards this little range down here. Okay, so it's still on track. Nothing much has changed there because of this ranging market that we found ourselves in. And today is Sunday, meaning that we'll look at the weekly close position, which we'll talk about in a moment. And so you're going to find that the bulls and the bears are going to be trying to fight out better positions, right? What's going to set them up stronger for next week, right? So the bulls are going to be trying to push the price upwards, and the bears are going to be trying to drag the price downwards. Now, our structures are indicating that down is the most probable scenario here based on the current behavior of people's trading patterns. But anything is possible and all that. But for now, I think the higher probability is the move to the downside. We do have this theoretical short position here. We'll talk more about that later as well. Let's go ahead and jump this up into the daily time frame, because these are the ones that are going to be really more important as we kind of get into that weekly close, right? We're going to be looking at the daily and weekly to understand where we sit a little bit more detail. So let's bring smart money concepts into play here as well. Okay, this will help us understand where we currently sit. At the moment, we are still in a technical bullish structure on our daily time frame. You can see that we had the change of characterization. This happened over here on the 17th of March. We then got this break of structure just up here on the 3rd of July, which basically confirms that it's a bullish structure. Now, we haven't broken that, but this move to the downside, if we complete a 5-wave pattern, will basically break this and turn it into a change of characterization that is bearish. So we have to be a little bit cautious here, because although this gives us that idea that we're still in a bullish market, actually the reality of the situation is we've come down lower than the 50 EMA, lower than the 200 EMA, and the 50 EMA is looking like it's on a trajectory to go down lower than the 200 EMA, a death cross, if you will, to a degree. So we need to kind of consider that actually things are not looking positive or that positive on this time frame. Now, with that being said, there are things that can happen here that can make us a little bit more bullish, right? And for example, we're going to be looking at trying to push the price higher than 28,588. If we're able to do that, then we'll actually be able to break this 5-wave structured pattern to the downside, because wave 4 would not be allowed to cross wave 1. Okay, so we know that's an unbreakable rule. So therefore, what we'd look for is we'd look for that as a way of breaking our pattern here and actually confirming that we are more bullish than we are bearish. Okay, so the bulls have a very clear path here. They've got a very clear idea of what they need to do, and it needs to be done before they come down into this low. If you just hit 22,659 to 23,426 and then rally up to 28.5K, that's not valid because we would have actually completed the wave 4 and gone down into the wave 5, meaning that you could go all the way up to 31,809 and still be in a bearish structure. So we have to consider what these patterns might mean, how we could break them, how we could become bullish rather than bearish, and what the bears are going to be looking for here is essentially dragging price down to complete the 5-wave pattern, because if you complete 5 and you start with 5, you must end in 5, and so therefore we would see a much deeper significant move to the downside, of which it is nice to see that some analysts around the world are finally starting to catch up with what we've been saying for quite some time, and that $20,000 is probable, and there's even the potential for $10,000 to $7,000. You can see these from Bloomberg analysts now talking about Bitcoin's potential slip to new lower lows. Now, like I say, 20K is the area that we're going to find hopefully good support on, and that will prevent us from going down into new bear market lows for Bitcoin. But if we do lose that area, there's going to be pretty much slippage all the way down to 17, and as soon as you kind of lose that area, it's going to be so tough to kind of keep any kind of bullish momentum. I think we're going to see a cascading effect of negative price action at that point, which could take us down to those $10,000 levels. Again, there's a lot of psychological support to be found in some of those ranges as well. So if that were to occur, there's still some good support levels to be found before potentially going down into those deeper areas. So, it's good to see that there's some Bloomberg analysts actually taking an objective view to Bitcoin that's not just, going to the moon because everybody wants 100K Bitcoin. I'm right there. I want a bull market. I want 100 to 150K Bitcoin. But I'm also quite realistic about what's going on in the economy right now. And we can't be tricking ourselves into thinking that we're going to the moon just because we want it so bad. Ultimately, there's a lot of different things and lots of different catalysts that can help drive that. Bitcoin spot ETFs are one, but they're not going to happen until 2024. And so the rest of this year can be very, very bearish. So we need to be very open to the ideas that maybe things are not as bullish as we want them to be, and maybe they are just what they are, unfortunately, and that is bearish right now. We obviously saw the Fed chairman as well talking about how they are more than prepared to issue more interest rate hikes, right? And that's, again, not going to be seen overly positively with basically sucking liquidity out of the market. That's the whole point of these interest rate hikes. So, let's go ahead and move this on to the weekly time frame and talk about those targets, right? Where are they? Well, we've got the 50 and 200 weekly EMAs, okay? This is the USDT pairing, by the way, guys. And so what we can do is we can see here that we have the 200 EMA set at $24,663. Now, that's going to be the area that the bulls are going to want to keep as support, right? Anything lower than 24,663 on a weekly close is going to be seen very, very bearishly. Now, I do not suspect that the bears are going to be able to drag Bitcoin's price down to 24,663 or lower. So, it's one of those. I don't think they'll do that, but we did see some pretty steep price action in the previous weeks or so. So it's definitely possible, but unlikely. I think for the most part, the bears are going to be trying to keep the price below the 50 EMA, which would be 26,907. Now, of course, where we are right now is between these 50 and 200 EMAs, as you can kind of see right in here, right? You can see that we're above the 200 and below the 50. So the bulls are going to want to try to get price above that 50 EMA, 26,907, and the bears are going to try to keep it below the 50 EMA. So basically anything below 26,907. I think the bears would want to see price below the 200, but I don't think that's going to happen. And so therefore we kind of have a clear path here. If we just close right between the two again, then we remain stagnant, I think, for another week. But there is some indications here that we might be starting to see potential momentum shifting. The market is quite undecided. We can see that with a range of different time frames giving us different momentum indications. For example, we can see that the monthly time frame is overbought, but the weekly is now in an oversold territory, right? These two are the opposite ends of the spectrum. We have to bear in mind, though, it takes 4 weekly candles approximately to build a 1 monthly candle. And so where we are overbought on the monthly time frame and not overbought on the weekly, we might see a small bit bump to the upside, a blip to the upside, before we actually see a massive move to the downside. Once the weekly and monthlies are very aligned, I think we're going to be in a very difficult position on Bitcoin. So if, for example, we do see progression to the upside on the weekly time frame, that brings us back to the overbought area, and the daily is also in an overbought area because the daily and the weeklies are pretty much aligned right now. But if they were to kind of all become quite bearish looking, then yeah, I think that's really when we need to be thinking about those bigger short positions on the market. So let's go ahead and bring it up the data side of things. It's been a bit of a slow news day. There's nothing really noteworthy in the news, but we have got some on-chain data that might just give us a little bit more of an insight as to kind of what's been going on over the last little while. So membership.cheekycrypto.io is our membership website. Here we can have access to so much. We do a 7-day free trial across all the plans, so it's risk-free. You can check out everything that we have to offer, and I think you'll like it. But if you don't and you want to cancel, you can go to your profile area, go to your subscriptions and cancel it there. If you do not cancel it, you will be charged. But in today's video, we're just going to focus in on the data. So we're going to come over to the data zone and we're going to go over to the Bitcoin data, load that up, and it's going to look like this. Okay, so in here we have the overview. This gives us the idea of how much circulating supply there is, the all-time highs, all the way through to the number of transactions and the costs in the last 24 hours. This is a good overview. It shows you things like the inflation rate. So it's 1.62% yearly. 843 Bitcoin was mined in the last 24 hours, right? So one of the most important things that we need to consider is what drives price, or what drives price is the imbalance between supply and demand. Okay, if you've got more supply than you have demand, then price goes down. And if you've got more demand than you have supply, then price goes up, right? Very, very simple. And nothing else really matters. If you just focus on those two things, you'll understand the markets very, very well. And so where we've got 19,468,000 Bitcoin, it's a pretty sizable amount of circulating supply. You've got to bear in mind there's only 21 million out there, maximum supply, right, that could ever be mined. And we have produced 19.4 million already. So halving the kind of rewards is going to have very minimal impact on the circulating supply because the circulating supply is already very high. Now, a lot of people do speculate that the Bitcoin halving event is going to be the catalyst of a bull market. I think that's a load of BS personally, because the reality of the situation is that in the last couple of bull markets, it was coincidental that the Bitcoin halving event actually happened after Bitcoin had already started its bullish market, right? And a lot of people were jumping on the bandwagon saying the halving event was the catalyst, and it wasn't. For the most part, 2018 was the bear market low, and that bear market low signaled the reversal in the market in 2019 and the start of a bull market. Okay, there's no in between. You're either bear market or bull market, right? There's nothing else. And so we have to consider that when you finished your bear market, you started the bull market. And there was a significant surge to the upside in 2019 into 2020. Of course, so we had the pandemic and the drop in Bitcoin's price during the pandemic, which actually then coincided with a halving event and a reversal in the market. So you can see how the coincidence here of the Bitcoin halving event would have the kind of the ideal, the image projection that it caused a bull market, but that was not the reality of the situation at all. Now, 19,468,000 is more important. Okay, it's important to know that that's the circulating supply, and what's going to create shrinkage in that and what's going to increase the demand. Those are the things that are really important rather than the Bitcoin halving event. And of course, in 2024, the next halving, when it happens, is going to coincide, and it does coincide currently with the dates projected for the Bitcoin spot ETF. So I think we're going to end up with another alignment of coincidences that will mimic the idea that it was the Bitcoin halving that started a bull market, whereas in fact, I believe that it will be driven specifically from the spot ETFs being approved in approximately March of 2024. Okay, so it'll be interesting to kind of see how these things kind of play out. Okay, now let's go ahead and take a look at the wallet side of things, because in here we can track the amount of wallets that have specific amounts of Bitcoin. Okay, so we've got the retail side, everything from 0.001 all the way through to 10 units of Bitcoin. And then on the institutional side, 100 Bitcoin all the way up to 1 million Bitcoin. No one has 1 million, but it's there nonetheless. And so if we take a look at the traders, which are the 100 Bitcoin or more, these guys have, there's 15,833 wallets, right, to start with, that have over 100 Bitcoin. And they're very, very flat. They're not really accumulating or selling in kind of large quantities. Instead, what you tend to find is that they are basically just trading in and out of Bitcoin and of the asset, right? They're buying it and selling it, and they're basically just trading Bitcoin, right? And you can see here that they're actually coming down quite aggressively into 2023 so far. They've had a couple of moves to the upside and all that kind of stuff, but very, very flat in comparison. You can see that in the last 365 days, they're also flat. And this is because they spiked up and they bought a load of Bitcoin before the surge to the upside, and then they started to come on out of their positions. So you can see the orange line's price and the black line are the number of wallets that have over 100 Bitcoin. You can see they're just trading BTC. They're not that interested in holding it long term, which is an interesting indication of maybe things to come. But these guys are just traders at the end of the day. Now, when it comes to our whales, 1,000 Bitcoin or more, there's 2,016 of these. They have actually been accumulating over the last little while here, last 7 days or so. It's up 0.1%. Other than that, though, outside of the last 7 days, these wallets have been unfortunately decreasing. They're not increasing. Over the last year, down 6.54%. So not looking like they're looking to hold Bitcoin for the long term. Just been selling, and they've been selling obviously to the retail investors who are accumulating. So for the most part, not a positive story to be seen here from this size of wallets. Now 10,000 BTC or more, there's 108 of these wallets, and again in the last 180 days, last 90 days, last 30 days, they're not looking overly positive. You can see in the last 365 days though, they had accumulated 12.5%. They were buying in the bear market, and they've started to sell on the way to the upside here. So as price action went up, they started to aggressively dump their positions. So this is quite an interesting thing, because it also happened in 2018. They accumulated during the bear market and then started to flood the market into the bear market low with excess amounts of supply. And like I said earlier, everything comes down to supply and demand. And if there's an excess amount of supply, that's just going to flood the market, where there's only one direction that price is going to be going in, and that's to the downside. And so monitoring this wallet is quite interesting to me. I'm not to say that it's going to do exactly what it did before, but at the moment, the setups of this particular sized wallet is very similar, and it looks like the similar kind of outcome is something that we need to be considering. Okay, so keeping a close eye on it to see kind of how things kind of play out when it comes to that wallet size there. Let's go ahead and jump into the world of exchanges, because liquidations in the last 24 hours have been rather slow. $369,000 of Bitcoin liquidations. So as Bitcoin's price has not really had any major volatility, it's just gone a sideways movement. That basically means not a lot of liquidations have occurred, not a lot of price volatility has followed. So 𝗕𝗂𝗋𝗊 is the exchange with the highest amount of liquidations in the last 24 hours at $179,000. 98.34% of positions were long positions that were liquidated, and 1.66% were short positions, which is quite alarming in itself, but not terribly too unusual considering the price was just slowly grinding its way down underneath that 50 EMA. So 𝗕𝗂𝗋𝗊 was 48.42% of all liquidations, Binance 25.6%, OKX 22.9%, and so yeah, it is what it is. Do I think it's unusual that 𝗕𝗂𝗋𝗊 is at the top? Yes and no. It's unusual that they're at the top, yes, but the amount of liquidations are so small, it's not unusual in the amount of liquidations that 𝗕𝗂𝗋𝗊 had. So it's one of those things. We'll keep a close eye on it, but I'm not too concerned over the things that are going on there. Now, taking a look at other kind of things when it comes to exchanges, it's important that we kind of diversify the exchanges that we use. In bullish markets, it's incredibly difficult sometimes to log on and liquidate your assets as you want to. And so with that, a strategy of basically making sure that you have access to as many of these exchanges as possible is typically the best way of going. My strategy simply is that I will register and understand how all of these different exchanges work so that in a bull market, should I need to use one of them, I can get on and I can go ahead and do what I need to do. Now, essentially, there's many different exchanges out there. BitGet is my current go-to platform. I use it for 100% of my leverage positions. I use it for 90 to 95% of my spot positions. And if you haven't yet signed up to BitGet, you can go ahead and check out the affiliate link in the description below. If you do use that link, you are eligible for up to $8,000 of rewards, depending on how much you deposit and trade on the platform. If you do use that link as well, you'll also be eligible to take part in our trading competitions in our Discord server. This is something that Chris and myself host. It's not affiliated with BitGet. It's not affiliated with YouTube or anyone like that. Essentially just something that Chris and myself do. It's a bit of fun. If you're using that link, we can basically track your behavior, as in, what kind of trades you've got going on. Are you winning or losing? What's your win rates? And basically use the BitGet platform to basically find the person who has the best percentage portfolio gains in the last week period and reward you with a prize. So if that sounds of interest, why not also use their link in the description below to take part with that. There's also so many other things that BitGet do, everything from the KCGI competitions and just so much more. So why not check it out, linked in the description below. Now, BitGet, as I said, is my go-to platform, but it's not the only platform. I'm also registered on Binance, Coinbase, KuCoin, Gate.io, Crypto.com, Bybit, Mexi, so many, right? And it's important strategy here, because what you want to do is you want to make sure that you can register, get familiar with how to deposit, how to withdraw crypto, how to withdraw fiat or deposit fiat to the platform. Do you need to do KYC? Do you need to link bank accounts? Doing all these things in the bear market sets yourself up for success in the future. So if you haven't yet checked it out, why not go ahead and get yourself registered on these platforms, do yourself a favor and get yourself set up for the bull market. Let's go ahead and jump down to the next section, which is going to be trades. I still think we have the ability for a short trade here. We are pretty much hovering on yesterday's entry as well for this theoretical level. Okay, so stop loss would be basically above that swing high, so 26,322, with the idea of basically taking profit at 25,604. So yeah, so that trade idea is still very valid. You wouldn't need massive amounts of leverage. I would probably be somewhere between 5 and 10x on this one. Risk reward ratio being about 1.83, and so yeah, for the most part, a pretty reasonable expectation I think to be seen here when it comes to the trading elements. I suspect we're probably going to be able to get a better entry on this one though, because like I say, on Sundays we expect volatility. I wouldn't be too surprised if we come up a little ways before we actually go ahead and move on down, and we can grab hold of a little bit of a better entry and get better profit. If you're not really too fussed on that and you just want a good kind of entry setup with stop loss and stuff like that, then this would be my approach to it. But do bear in mind, I'm not a financial advisor. I cannot give you financial advice. All I can do is tell you how I would approach things and how I would perceive the market to be. If you found this video useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here. And until the next one though, guys, have a fantastic day.